Of course, but before that, there's so much more. Let's get to our stocks of the morning. And I'm starting with Eicher on a consolidated basis year on year. Eicher Motors, what I'm looking at first, thumbs down there. Revenue is up 19% to 4,973 crores versus 4,179 crores. EBITDA is up 10% to 1,201 crores. But why is it a thumbs down? Largely because of margins. The margin slide from 26.1 to 24.2% is the reason. Net profit is up 1,171 crores versus 996. Just a few notes I'll go through to give you a sense of what brokerages are saying on Eicher. Citi has maintained a buy with a target of 6,050 from 5,350, but they do say that the third quarter results are slight miss in standalone EBITDA. Other income is what has boosted PAT, so that positive PAT figure that you're seeing is from other income. The robust performance has come in from VECV and increased valuation multiples given better volume prospects. Focus is clearly on growth, with Royal Enfield expected to maintain its dominant status. Morgan Stanley, meanwhile, maintains an underweight and hikes the target price from 3,855 from 3,655. They do say, though, that weaker than expected Q3, a miss on EBITDA as far as estimates go, owing to a weaker mix, plus higher promotional and launch expenses. Growth over margins is the right strategy. Stock pricing and high growth and high margins, achieving both will be tough, says Morgan Stanley. UBS, meanwhile, has downgraded to neutral from a buy. They've cut the target price to 5,650 from a 5,950. They say margin miss due to change in mix and higher marketing costs. Pivot to growth to restrain margin expansion, like the growth pivot, but downgrade owing to significant outperformance. See outperformance compared to industry, but we do not see margin expansion. So like I said, that margin number is the reason why there's a thumbs down, though on other metrics, the numbers don't look too bad. Apollo Hospital, though, is a thumbs up. Segmental performance has been pretty good. Healthcare services has been pretty good. They're focused on higher growth in specialities. That's a 10% year-on-year volume growth. That has aided higher revenue realization. Overall, hospital occupancy has also risen to 68% from 66% last year because of more patient volume. Revenue up 14% to 5,526 crores, which is slightly under the Bloomberg estimates, though. EBITDA is up 24% to 761.5 crores. And EBITDA margins have expanded 12.7 to 13.8%. Net profit is also up 52% for Apollo Hospital. Their limited lifestyle performance, that wings revenue also grew 15% year on year because of the network effect. And the PAT was positive versus loss of last year on account of growth in operational revenue. This is for the core Apollo Health. So overall, Apollo seems decent. We will hear from the management as well ahead on the show, so stay tuned for that. And the third one, MTAR Technologies, is a thumbs up just because of the sheer numbers. And I would say the order flow is the reason. Revenue is up 47% to 174 crores. EBITDA up 39% to 33 crores. Margins, though, have come down a tad, 20.2 versus 19.1. But net profit is up 53%. The order book has stood at 1,030 crores as of December 2024. And 621 crores of orders have come in the first 9 months. They expect orders in the civil nuclear sector in the near term as well. So, which is why MTAR looks pretty interesting.
Interesting name to end with, and could very, very strong performance. You know, I really wanted to take Nalco as one of the stocks. The only problem is because metals are a bit uncertain, it becomes difficult. But what a performance by what numbers? I mean, blowout quarter in terms of margins. But we'll leave. Okay, maybe just mention the Nalco numbers, though it's not one of the key stocks. But Tamanna, the margin performance, right, in a quarter when Novelis has come out, Hindalco has come out. I mean, this is just exceptional performance by Nalco. Yeah. So let's see how this one reacts. Just the caveat that both on Hindalco because of Novelis or Nalco, because of the pressure on metals, it becomes difficult to call whether it's a big thumbs up or no. But the numbers by themselves look okay.
Yeah, I mean, the thumbs up, I would say, is basis the numbers.
Basis the numbers.
There could be 100 other factors that come in through the day, that some seen, some unforeseen. Yeah. But we're going to be speaking to Nalco ahead, so that'll be interesting to see as well.
So looking forward to that. So my top 3 stocks, and I really wanted to take Nalco, but not taking it. My first stock is Nykaa. I thought the numbers look very good. A very strong quarter 3. The most important thing to my mind, So these are the numbers. Okay, let's pull up the numbers first. Of course, revenues are up. EBITDA margin 63 basis points at 6.2 versus 5.56. Net profit up 51%. The point is, management highlighted easing of aggressive competition. Which platform company or tech company is talking this? Everybody is talking about aggressive competition. Nykaa is highlighting quite the opposite, which actually stood out for me. Jefferies has raised the target price to 240. The others also have kept target prices around 200 or 220 or thereabouts. So most people bullish. Let's wait and watch what Nykaa does in the session today. It's a thumbs up. So keep an eye out for Nykaa for sure in the session today. The other one is Escorts. Now the numbers were okay. I mean, if you just look at the headline numbers from Escorts, revenues 8.5%, margins marginally lower, maybe 11.4. The estimates were 12.6, but 12%. So you could argue that on the margin front, they've dipped a little bit. Net profit 323, estimates was 315, so largely in line with estimates. But here too, the management has pointed out a robust Q4 for the industry, 15% growth, on the lines of what M&M said as well. So tractors might well be in a good wicket. And Escorts has guided for market share gains in FY26 once some of their capacities come on stream in the second half. So do keep an eye out for Escorts. Remember, yesterday a lot of technical charts were constructive here, ended in the green on a bad day yesterday. Let's wait and watch what Escorts does today. I would suspect the commentary looked solid and therefore could see some upticks. And my version of Tamanna's MTAR is Genus Power. Because again, a stock which came out with a blowout set of numbers. Revenues at 604 crores versus 259 crores. Margins at 15.4% versus 5.2%. And net profit at 56.65 crores versus a loss of 9.92 crores. Blowout set of numbers could very well, in addition to MTAR, in addition to Nalco, see some very strong upticks. So keep this one at the back of your mind as well. So these are